Welcome to Framework Fortune and welcome back Framework Fortune community. I'm your host Ben and I've got another how to build a portfolio lesson for you, and this is how to pick dividend stocks. Now, why are dividend stocks attractive to investors and why do I like them? Because you are putting your money in something that is going to pay you per share either quarterly, annually, bi-monthly, or monthly. So you're getting a passive income cash flow from dividend stocks. And that's why they're widely popular with a lot of investors, because you can compound those dividends by investing them back into the company, which will make your next dividend payment even bigger. And if you continually do that, eventually you can get to where you're making a nice little cash flow off of your dividend payments. If you're still not clear and you're new to investing in the stock market, think of it as a payment for investing into their company. You are getting profits from that company and you don't have to do anything. The CEO and board will all be running the company. You just sit back and collect your nice little dividend checks. So when I'm looking for dividend stocks, the first thing I want to do is I want to go into a long time frame. So we're going to scale back a couple of years on the daily chart here. This is HRZN, Horizon Technology Finance. This is one of my picks, and soon after this video I will be coming out with my top 10 cheap dividend stocks that I like, and Horizon will be on that list along with some of the other ones that we may possibly cover, because this is the list I'm pulling for of about 36 dividend stocks under $20, and I'm going to be narrowing down using this process we're going to go through. So I look back as far back as I can. Have they been paying out consistent dividends? So on TradingView, they're going to be a little blue D. On Thinkorswim, it's going to be a little green money symbol. So if you see plenty of these, then you know they've been paying dividends out consistently since 2013. So they got almost a decade of consistent payouts. You want consistency. If you look at the chart and there's a bunch of dividend payments, but they're all spread out all over the place, there's big gaps, that's not a consistent cash flowing asset. That's a random cash flowing asset that may or may not cash flow. So you don't want those. You want to see plenty of dividend payments over a long period of time. This one, and the reason why it's one of my favorites, pays out monthly. And you can see there they pay out 10 cents per share that you own. Every month, if you own 100 shares, you're going to get a $10 payment into your brokerage account from Horizon. So if you compound that and you make it 10,000 shares and you're getting 10 cents on 10,000 shares, you would then be looking at a $1,000 dividend payment a month. There's not a lot of monthly dividend payment stocks out there, but this is a really nice way to build some cash flowing assets if you can get a couple of these. Now, besides the consistency of the dividend, I also want to look at the price currently to what the dividend payment is. So, when you're looking to figure out a dividend payment, you have to add up all the payments over a year to get the per annual. There's 12 months, so Horizon's going to have 12 dividend payments of 10 cents. So that is a $1.20 dividend payment over the year for one share. The price is $16.30. So a $1.10 per share at $16.34, if you look right here above my head, is a 7.34% dividend yield. So I want to see dividend yields that are at least 3%. The Federal Reserve normally runs inflation around 2%. So you've got to at least be making 2% of that dividend payment to just account for inflation. And then you're going to have some taxes on those dividend payments too. If you're just looking for dividends, you need dividend stocks that pay at least 4 to 5% just to make some money after taxes and inflation. Now, right now, inflation is running really hot. So a lot of these stocks, and I'm expecting the stock market to crash, a lot of them will drop to lower prices but still pay out the same dividend, which will bring that dividend yield up, because the lower the price, if this was $5 and you were getting $1.10 a share, it would no longer be a 7% dividend yield. It would be about a 23 to 25% dividend yield at that price. Because you could buy a lot more shares at $5, and this happened in the last COVID dip. And if you're thinking it, yes, I absolutely did buy in the dip down here as it started rebounding. I got them about $8 on Horizon, and they were still paying out, as you can see there, 10 cents. So the dividend yield at $8 for $1.20 a year is a lot better than up at 16. So I wouldn't be buying Horizon right now personally, but if we have the crash like I'm expecting, or at least some type of correction, and it gets cheaper, well, then you can load up on a nice cheap dividend stock. I like it because it is a monthly payment. Not all of them are. You can see this one is a quarterly payment. September, May, February, November. So you're getting paid out every 4 months. Now this one has a 2% dividend yield, so that's pretty low. How much are they paying out? 10 cents every quarter. But this is a tanker stock. A tanker stock, if oil is hot and transportation, this could be one that's undervalued right now. That could, if the price goes up and they make more profits, pay out more of a dividend payment. A lot of times that's what you see happen. The higher the price goes, the bigger the dividend payment will be because the company is making more profit. So with this one being undervalued, I'm looking at it because, hey, this thing might run back up to that $30 area, maybe that $40 area, and on the way up, I can collect some dividends. It's not the best dividend yield, but as the price goes up, it will get a little bit bigger, and that'll add to my position as well, compounding if I buy back into it with those dividend checks. So when it does finally rip, I can have a nice sized position off of those compounding dividends. So I do like very high yielding dividend stocks, but sometimes if it's a stock that can grow quite a bit in price, it may be worth it to take that investment anyway, even if the dividend is kind of low. Now, there are some pretty high dividend paying stocks out there. This is USA Compression Partners, and they have a 12% dividend yield. So that's a pretty good dividend yield, and you see they pay it out quarterly, and it's about 53 cents per share quarterly. So you're getting $2.06 annually per $16.53 share that you own right now. Now, if you bought this thing way down here in the COVID dip at $4.51 and you got a 53-cent dividend right after that, that is a pretty high dividend yield. And if you've just been holding, you've been getting all this growth plus the dividends and compounding it back in by buying shares with those dividends. By the time you're up to this price, this position has built you quite a bit of wealth, and then you could sell it there if you wanted to. So that's why I'm mentioning the crash from COVID, because a lot of these, if we do crash, could be a lot cheaper and will be great picks for long-term portfolios, getting them at these super stupid low prices when they pay dividends no matter what really happens. But if you're buying them just to cash flow, that means you're never going to be selling any of your stocks. You're going to be holding them forever, so you really don't care about the dips as much. You want to be buying in the dips, but you're not going to be selling. You're just trying to keep getting that cash flow. Now, sometimes when the market crashes, if it's not a good company or not a well-ran company, they will not have money set aside for their shareholders, and they may cut dividends. This company did not, so I like to see that. Even in strong pullbacks, they are still paying out their dividends. They didn't even shrink it. Some might shrink it. Some might just cut it out completely. So I want to look for ones that no matter what's going on, in any case, whether I'm trying to make it a cash flowing asset or trying to make it a nice building position for some big profits, I want to see that consistency. Now, this thing has been downtrending for about 7 years now, so you definitely want to do a lot more research than just looking at the dividend payments. So normally, I like to see an uptrend on the overall chart, and you can see that on Horizon. This one had went sideways for a while there, but since the COVID dip has been on a nice uptrend. So I like to see some type of uptrend if I can on a dividend stock, but sometimes you'll see them in a downtrend like that one, and maybe that's a buying opportunity. You may be asking, why am I looking at stocks under $20 for dividends? Can't you just buy Apple and get a dividend? Sure, let's go look at that. Let's compare the two here and see how much money that you can make. So here's Apple. Apple's $142 right now, and you would be getting an 88-cent dividend. So look above my head again right here, and you can see their dividend yield is 0.6%. So yeah, you're buying an Apple. It's a nice, stable company. They've been paying out dividends. Apple's not going anywhere. But you're not really getting that much of a dividend. So let's say you buy 10 shares of Apple, 142. So that's going to be $1,400, $1,420 basically. For $1,400, you got 10 shares. So times that 10 shares, you'll get your 88-cent a year dividend payment, which would be $8.80. So you're investing $1,400 to get an annual dividend payment of $8.80. Now let's go back to Horizon, and we'll use Horizon at this price. That same amount of money, the $1,420, divided by the $16 that Horizon is, we'll just say 16 to make it simple. So we would have 88 shares of Horizon. We'll round up to 89 since we're not doing exact math. So 89 shares of Horizon, and you're getting $1.20 per annual, is $106. So for that same amount of money that you put in Apple, the difference in dividend payment is almost a whole $100. Because this is a cheaper stock, you're able to get more dividends, which means bigger dividend payments. So yeah, you can be safe with Apple, but you're only going to be making $8 a year, $9 a year if you invest $1,500. Invest $1,500 into Horizon at this price, which is kind of high for Verizon. You're making $106. So that is the difference. That's why I look for the cheaper ones that are consistently paying out dividends. If I'm trying to cash flow, especially monthly or bi-monthly or quarterly, I want to be getting the best bang for my buck. I've never really thought about it, but that sounds like a very dirty saying. Anyway, I'm looking at the dividend yield. I'm looking at the price to figure out how many shares I can get times that dividend yield to figure out how much profit I can make. And I also would like the stock to be somewhat uptrending, or at least starting to uptrend, starting to turn around from a dip. I don't want to be buying at the top. I want to be buying low. And you want to see that consistency in dividend payments. And then after that, everything else is just looking at the financials. So you can see Horizon here. They've been growing. Total assets in 2017, $234 million. Total liabilities, $100 million, of 42% debt to asset ratio, to now, last year, 2020, $407 million in total assets, $194 million in liabilities, and a 47% debt to asset ratio. So they do stay a little around the 50% area, which is higher than I normally like, but they're paying out that consistent dividend. So they use the debt to give them some leeway to be able to keep their shareholders paid. As long as their assets are growing and their debt is not growing faster than their assets, that's a good sign to me. And of course, you'd want to check the free cash flow on the balance sheet and the total revenues, all of that. Make sure you're not buying a junk company that has a ton of debt. Now, I'm going to go through quickly for the end of the video here one of these stocks to see whether or not it is going to make my list. And we're going to do this with SUNS. So you can see we look back. We got dividends all the way back to at least 2012. This has been moving sideways pretty much for this entire time except for the COVID dip. So if the market crashes, we could get this cheaper. We got a 7.7% dividend yield, so I'm not too mad about that. So let's pop into the financials real quick. All right, looking pretty good there. We've got total assets growing. Their liabilities have started growing a little more, so that is a little concerning. That's where the extra fundamental research will come in at to make sure that it is not an actual concern. This may not be a big deal. And then, of course, I forgot to do it on Horizon, but I already know a lot about Horizon. I'm going to check out their website. So this is CLR, Senior Investment Corp. Because if you're buying something, you want to know what kind of business you're buying into. This company is a yield-oriented business development company that invests primarily in senior secured loans of private middle market companies to generate current income that is distributed to shareholders monthly. So their whole thing is to make investments to to keep paying shareholders. So that's pretty interesting. You're buying into assets just by buying into this company. This is an investment company. So let's check their portfolio real quick. Let's see what they got in it. So yeah, we can see there they got $368 million in the portfolio as of June 30th. So we go to their investment strategies. They have sponsor finance, they have business credit, they have healthcare ABL, and life science finance. So you're getting quite a bit of exposure there to a few different sectors, and you're getting a nice dividend payment. So yeah, I like what I've seen so far. So this one might be on my top 10 list. So that's pretty much it. I'm looking for a business that's consistent, that has exposure to continually to make money, pay us, the shareholders. Dividend stocks are great because you get to own a piece of a business and actually get profits from it. So you get to own a business without all the work. And I can tell you as a business owner myself, that's a very nice perk, and that's why I like dividend stocks. So if you have any more questions, leave them down in the comments below, and look out for my top 10 dividend stock picks under $20 coming soon. Appreciate everybody joining me as always. Stay safe out there. Until next time.